I sold all my VOO for SPLG. I'm just kidding. In fact, I did not sell any of my VOO investment, which is Vanguard's S&P 500 ETF, for SPLG, State Street's Global Advisors S&P 500 ETF. I think that would pretty much ruin my whole reputation and honestly crush my soul. I've been getting asked questions like, hey Marcos, do you like VOO more or SPLG? This is a very valid question because in my Vanguard brokerage account, I have over $62,000 invested in VOO or over 120 shares, and in my Roth IRA, I have over $2,300 in VOO or over 4.5 shares. So VOO makes up the highest portion of my over $115,000 ETF portfolio. So am I biased? Probably. So in this video, I'm going to break down if SPLG is in fact better than VOO with a scorecard that I made, and if I should even consider selling all of my money from VOO to buy SPLG for the foreseeable future. So let's get started. For some quick background information, the S&P 500 is made up of 500 different stocks that represent the US economy. So you have mostly large cap stocks and the benefit of diversification, a long history of strong performance, and a wealth building machine that can catapult you to have millions of dollars in the future. VOO is one of the most popular ETFs in the world, offered by Vanguard, which is one of the largest investment firms in the world if you want to invest in the S&P 500. On the contrary, SPLG is also an S&P 500 ETF that tracks the same exact index just like VOO. However, SPLG is not as popular nor as talked about as much compared to VOO in the investing community. Like I said before, VOO is associated with Vanguard, and Vanguard receives a ton of love from the investing community on Reddit, YouTube, and from the likes of famous investors like Warren Buffett and John Bogle. If we take a look at AUM or assets under management, VOO wins by a long shot from having over $1.2 trillion of AUM compared to SPLG, which has just over $45 billion. Essentially, a higher AUM often indicates investor confidence, as well as signaling that the fund is well established and trusted, both of which receive an A+ rating by Seeking Alpha, but I'm going to give VOO a point on this one. In terms of diversification, both track the same exact index, that being the S&P 500, so they're both going to have the same exact sector weightings as well as the same top holdings like Apple, Microsoft, Nvidia, Amazon, Meta, and Google. There's so many S&P 500 variants like SPY, IVV, and FXAIX, and they're all exactly the same thing because S&P Global licenses out the rights for funds to track their indexes like the S&P 500. So both of these funds receive a point for diversification. Moving on to the share price, VOO has a current share price of well over $500 per share, while SPLG has a current share price of over $60 per share. This isn't really a big deal at all unless your investment brokerage does not offer fractional shares, so in that case, SPLG would definitely be the better option. However, most brokerages do offer fractional shares, so you can invest with something like $5, $10, $20, etc. So that isn't really a big deal at all, and SPLG might be a great option if you can mentally you want to accumulate more shares to mentally stay motivated along your investment journey. But for me, Vanguard does offer fractional shares, which is my primary brokerage, so that does not steer me away from continuing to buy VOO, so that's fine with me. So I'm going to give a point to SPLG for that lower share price. Next is expenses, particularly the expense ratio, a fee that investors have to pay for the management of an ETF or index fund. VOO has an expense ratio of 0.03% and SPLG has an expense ratio of just 0.02%. If we take a look at a mutual fund calculator, this is going to be just fine for our ETF cost comparisons. If we invest $500 per month for the next 30 years with VOO at that 0.03% expense ratio, we pay a total fee along the way of just $6,512. while with SPLG at that just 0.02% expense ratio, we paid just $4,346, so you save a little bit of money by investing with SPLG, but the difference is very, very small. So SPLG gets a point for the lowest expenses and the lowest expense ratio. In terms of returns, they both track the same exact index. The S&P 500 averages around 10.5% per year since 1957 with dividends reinvested. But nothing is perfect, of course, so we're going to be taking a look at Seeking Alpha for more of a better picture of the return comparison of both of these ETFs. Over the last 10 years, VOO has beaten SPLG. In the 5-year, SPLG has beaten VOO, and in the 3-year, SPLG wins once again, back to back, and over the last year, VOO has actually beaten SPLG, so it's pretty much a 50-50 split depending on which ETF conquers the best returns for S&P 500 investors. So with that in mind, I'm going to give both ETFs a point on the returns metric. In terms of dividends, they will have the same exact dividend yield for both of these ETFs. However, the distribution of these dividends will be way higher for VOO investors because of that higher share price. However, for SPLG investors, the dividend distribution will be lower because you have a way lower share price. However, it's going to be very much pretty identical, so both of these ETFs will receive a point for the dividends metric. If we tally up all the points from our scorecard, we're going to see that VOO comes in with a grand total of 4 points, while SPLG barely edges out VOO with over 5 points, so SPLG is going to be the winner of this video for the best S&P 500 comparison head-to-head with VOO. Why I chose VOO is because I have most of my money tied up with Vanguard, and it made the most sense to have an ETF invested with them. Kind of like if you have an Apple iPhone, you also want to have AirPods or something like a MacBook to be in the same ecosystem. And I really don't want to switch from VOO to SPLG because I would have to sell all of my VOO for my brokerage account with over $11,000 in gains, which means I would have to trigger a taxable event and have to pay taxes on all of that $11,000 in gains, so that's going to be a very big downside. So on your screen is going to be a picture of the most recent taxes applied in 2024. All in all, both of these are great options for long-term S&P 500 investors. However, I'm very biased towards investing in VOO, but the real winner is going to be SPLG for that lower expense ratio if you really want to save a little bit of money, just a little bit in the long run. If you want to save a little bit of more money with having a lower expense ratio than SPLG, then there's some great options like FXAIX by Fidelity or FCROX by Fidelity, which are some great mutual fund alternatives to investing in ETFs, which are great options if you want to save just a little bit more money in the long run. If you want to see my over 6-figure investing portfolio, you can see it for free. Yes, completely free on the Blossom app. You can see my total holdings as well as whenever I buy an ETF like the S&P 500 VOO, you can see exactly when I bought it and the share price that I bought it at. So go ahead and see the link in the description of this video or in the pinned comment to give me a follow and download the Blossom app. If you guys like this video, please give it a like because this cute puppy did. Right here is going to be a video on my 6-figure ETF portfolio update. Continue to crush in the stock market and take it easy. Peace.